In today's Rebel's Edge, hedge funds are adjusting to a new headline driven normal, making tactical bets amid an expectation of increased volatility. In today's Venture Minute, we're going to tell you about Acres Gaming, a company that is revolutionizing casino gaming experience. And finally, Peloton rises once again. We had UOA in this name. We'll tell you what's going on and what's driving that stock higher. All this and more in today's Rebel's Edge.
Here we go, Mark. It's great to be with you, man. I tell you, you look pretty sharp as always. You got you got your sport coat on there, and you're somewhere. Where are you these days? You're almost as bad as John. Are you in Florida? Are you up north, or where are you?
Good Lord, do I wish that I was in Florida? I was in Florida for on and off for almost 2 weeks with a couple of meetings and a wonderful wedding over in Dallas that was sort of in between that. But I am in the frozen tundra of the Northeast right now. It says New Jersey on the map, but if I had to look outside, wouldn't be surprised to see a polar bear in my driveway. And so for that reason, I'm going to be getting back on a plane as soon as this weekend is over and getting the heck out of here until things get warmer. How about you?
You need to go down to the Super Bowl or something like that, man. It looks like it's going to be pretty nice down there. No, it's cold here, man. But it's Minnesota. We expect it to be cold in January and February. It's going to be in the negatives, and it is. We got some snow coming, and that should be fun. That's all part of it and all of that. So, you know what? I can't complain about it. It is what it is. But let's jump into it, Mark. I think we got a lot of fun stuff to cover here. So,
we do.
I got something on the macro side for the macro minute. I'm looking at DeepSeek. That was the big talk 2 weeks ago. And then it was tariffs last week. And now we're back to earnings. Thank goodness we're back to earnings. We're talking about what's really going on within the markets. Now, I know those other things have effects, but Amazon, Lilly, ConocoPhillips, Bristol Myers, Qualcomm. I mean, go through the list, ARM Holdings, all of them. So it's great. I love where we are right now. And I think that is the focus for me for the macro side of it, all about earnings and how well we're doing right now.
Yeah, for sure. Earnings season is definitely going very well. And I got to be honest with you, Pete. If you may remember, I did a little grind my gears segment. I believe it was with you when the whole DeepSeek news came out a week ago, Monday. And I said, this is, as somebody on Cocktail Hour called it, this is not DeepSeek. This is deep shit. Half of this is fake news. Since when are we trusting the Chinese government to say, we have an AI that we built in 3 days with $6 and a couple of baseball cards? Sure. Right. If you believe that, I have a bridge to sell you or a swamp somewhere near Newark Airport. My macro minute is about the hedgies. And look, folks that watch this show regularly know we follow the smart money. There was a book by that name that some of you may know about. So I'm always keeping in touch with the folks in that industry, fund managers. In fact, that 2-week speaking stint you just mentioned in Florida was around Miami Hedge Fund Week, where all of the major money managers from 100 million to multi-billion were all there. So we watch what they do because that gives us a lot of indication of what's happening in the market. And what I'm hearing from a lot of the guys on the desk is that they are adjusting their bets. They're adjusting their bets primarily around the duration. So they're going from traditional strategies that are looking for longer-term, broader market movements to more tactical alternative strategies that are more in line with the headline-driven market conditions that we've been seeing that they expect to see continue under a DJT administration. That's my macro.
I love it. I think it's great. I'll tell you what, how about this? Fantastic futures. We like to jump on that. I'm going to let you go on a direction I think you're going to pick, which is probably something in the metals world. I'm going to just go straight to coffee because I'm a coffee guy. And let me tell you something. 52-week highs, sure. All-time highs, absolutely. It has been absolutely ripping to the upside. It's now over 411. That's unbelievable, this run that coffee has had. And I will say this, Starbucks, they'll raise their prices, but when it drops, they will not cut their prices. Just remember that when you're going to Starbucks, folks. I mean, it's had a nice recovery back. It's because they're able to manipulate themselves around. Now, they can tell us that, hey, you know what, it's our premium coffee. That's a bunch of crap. It's not about premium coffee. It's partially the coffee addiction, But it also, we all watch those numbers, and it's, it's almost as if you went to the gas station and they didn't drop it when the price of oil went down, Mark, we'd all be pretty pissed off, right? Well, in coffee, nobody pays attention, so they can do what they want.
Pete, do I assume that that is all tariff driven, right? I mean, because all of the coffee producing countries are at some point in time in DJT's crosshairs from a tariff perspective. I assume there's no agricultural component to
No,
this.
there is. There is a lot of problems agriculturally, believe it
Oh,
or not. A lot of, whether it's storms. Oh, we see what's going on in the world today, right? Rainstorms here and fire over here. And so that does play a very big part in the whole world of coffee for sure.
well, I'm glad I asked. Well, I'll go really quick on my fantastic future. I love gold. Well, guess what? Gold hits another ATH all-time high, 28.70 per troy ounce. What's driving that price action? Guess what? Concerns over tariffs, trade wars, expectation of lower interest rates. It's what gold bugs call a perfect storm. We could see it going even higher. And by the way, kudos to Goldman. I remember we were covering this, and we cover the gold story quite a lot in the Fantastic Future segment of this show. But Pete, I remember talking about gold with some of the price targets that the guys over at Goldman put on it at the end of the summer, very, very early fall, and they've been spot on. And those price targets have even been exceeded based on all of this political stuff.
Yep, they've been absolutely amazing. And what they do at Goldman Sachs is incredible, especially in certain other sections as well. We don't need to talk about that right now, but these financials, there's a reason why they're going to the upside. Investment banking, I guess that's doing pretty well. All right, Mark, let's jump to Ford. Now, Ford's an interesting one, and I say that because the losses are absolutely stacking up. It doesn't look like there's like a whole lot of promise into the future. There's a really good reason why that stock is hitting 52-week lows today. Underneath 930 is the lowest that I saw today. So it's amazing. Are they caught up a little bit in the tariffs? Maybe. Their outlook wasn't all that great. They had some numbers, 5.5 billion in losses. Something about the EV and software that's just not clicking right now. They beat on the Q4, but their outlook was, pretty awful, I would say. So this is a name where I'm looking at it. I am not looking at it in any way for me to say, you know what, I think we should be buying Ford right now. I don't see them pulling out of this until a few things happen, and they still have to worry about tariffs, of course.
Yeah, they do. And listen, this is a company that I hate to throw shade on. This is one of the great American industrial names, 3 generations, 4 generations now running the company. We want Ford to succeed. Everybody loves their Ford F-150 pickup trucks, God knows, as you included. But yeah, I mean, listen, this is also sort of a trifecta, if you will, of just bad stuff. We've got the declining demand for EV against the backdrop of the realization that we're not going to have the EV grid nationwide to the same degree that maybe people hope that some of these automakers maybe were anticipating. You've got the tariff issues, you've got the trade wars, and interest rates. Look, interest rates need to come down even more for the cost of capital and borrowing rates for companies like Ford that rely so much on their credit lines to start to have a significant impact in the bottom line. I just don't think this one is a bullish trade right now. I'm staying away from it, unfortunately.
How about this one? And I'm curious your thoughts on Peloton, because I'm looking at this one. It's exercise. I've always called it the world's most expensive clothes hanger, right? For all the right reasons. They still have huge shorts, which is part of the reason why I think it spiked today. But Mark, when I go through the numbers, they beat on sales, right? That's fantastic, except for one thing, in my opinion, as a guy who looks at these things a little bit more in depth. So they did okay on that, but they're 9% lower than they were year over year. That's a problem, I would say. I don't, no matter how you slice it. And I think there's a lot of folks out there that just use different excuses on why the stock's either moving up or down. I'll tell you why it's moving up. There's a hell of a lot of shorts out there. There was some positivity that was put out there. And because of that, the stock had a big spike. It got all the way up over 10, got up to 1090 actually. Mark, it's not at 1090 anymore, and it's starting to pull back a little bit. I think this is going to be an interesting one. I'm not out there to say, hey, I think you need to short this one, but I'd rather be looking at puts than I would be calls in this particular name. By the way, they lost $92 million in the quarter. They were expecting to lose $68 million, and people think that's pretty good. That doesn't sound that good to me.
I listen, I'm scratching my head, and guidance for the upcoming quarter was also pretty disappointing, right? And well below what the street was looking for. And if you listen to the CEO, the new CEO, he talks about a couple things. This Costco partnership, sure, people buy a lot of stuff at Costco that they don't need to buy. God knows I do that, but that doesn't explain all the momentum in the stock. There is focus on improving margins, which is, by the way, what he points to that declining sales number that you talked about, that was a trade-off, short-term pain for long-term gain. Not
Mm.
sure if I'm buying that one. Definitely, I think this the short interest and the short covering is a part of what we have in the momentum today, Pete. But I wonder if this is also starting to get into the meme stock category. You've heard a lot of people talk about that. There's been a lot of chatter as to whether or not this is becoming something that trades like a meme stock, and that would be if we did conclude that that was part of the story going on here, it would certainly account for some of this completely unwarranted positive price action in the stock. This is a no touch. Don't try to chase this, folks.
By the way, oh, and we've got some unusual options in there as well. I mean, that part was great because that did give us a little bit of a show. There is high short interest. Is it going to get squeezed? It looks like they got a squeeze. And oh, by the way, we had some unusual option activity in this one, Mark. So great to see how this thing all played out for us. I would just say this: those that are in there, you better start deciding whether or not you're disciplined enough to take care of things the right way, because I don't know. As I said, it hit up to 1090. Next thing you know, it pulls back a little bit further, or 975 or wherever it was. It's been pulling back ever since that first spike. So something I think to keep your eyes on. How about Skyworks? Now, this one I think is pretty daggone interesting. The CEO stepping down. That's kind of a big deal. Apple cut some of the supplier dependency that they've got there. That's kind of a big deal. Oh, especially because of the fact that 69% of the revenue for Skyworks comes from Apple. That could be a little bit of a problem, and I can see why it's at a 52-week low today, Mark. They're slamming this thing. It hit 62 bucks. I mean, the chart says it all. 62 to 120 is what the range is. 62 is the number today. 52-week lows. This looks pretty awful, and this is not a name that I think you should say, you know what, maybe I should take a speculative thing here. I think you could watch it for a while and wait for them to actually prove to us that they can work something out with Apple, because that's what's really going to control this whole situation.
Yeah, and there's no doubt about it. And they may or may not be able to mend that fence, Pete. I mean, I don't think it looks too good for the company. I think this is a permanent condition based on what I've read. And all of the CEOs talk about, hey, we're involved in generative AI, and we've got a plan for products focused on that, new AI technology. That's one example of where the use of just slapping AI, along with this news is not enough to help the stock. Stock was down almost 30% before we went live on air. Not going to try to catch this falling knife. I'm just going to watch it fall.
I think that's a good move. I think it's a really good move. Hey, you know what? After it goes down something like, call it 30%, I think you can wait for a while to see if this thing can absolutely make any kind of a turn until you
Yeah.
start considering it. Next up is Tapestry. Now, is it the most exciting name in the world? Probably not. But the reality is they sell some stuff. They got some great margins. They had strong sales, as a matter of fact, off high demand. People are still willing to pay a lot of money for bags and stuff like that, Mark. That's the world that we live in today. Their earnings they missed, but the revenue they beat. It's an interesting one. And they did raise 2025. So in terms of the revenue, it's interesting to see that one. By the way, 52-week highs today. So
Yeah.
maybe we shouldn't be too quick to sweep this one away. Look at that spike that you've got there. 32 bucks to 87 on the highs. This thing hit those levels today, 52-week highs. Pretty impressive quarter. And when you look at the outlook, they look like they're thinking things are looking pretty bright.
Yeah, there's no doubt. And we talk about this all the time about how the outlook and the forward guidance is as important, if not more important, than the earnings print itself. That's part of the story here. Another part of the story for me, I always, as you like to know, try to read these sort of macro theme tea leaves. The upper end echelon, the higher income consumer, doing just fine, continuing to spend. You could expect to see that extend into other sectors, luxury travel, by way of example, other apparel names. That's the kind of stuff that I really try to get when I look at a information and a report on a name that I don't follow that carefully. This is not one that's on my hot list, on my watch list, or even in my portfolio. But you can often get some really good indications of what the rest of the sector and the adjacent sectors are going to do. And Pete, I got to think that, the continued bullish activity, notwithstanding the vol, but the continued bullish activity and gains in the stock market is making, which we expect to continue, as everybody knows, is making that upper income consumer feel even more confident, remain confident, and keep on spending.
Yeah, absolutely. I think do you have something you wanted to hit on something, I think?
Yeah, Pete, in today's Venture Minute segment, we're going to cover a very exciting company that's conducting an equity crowdfunding round, which means all of us have the opportunity to participate in the upside of this company. I'm talking, of course, about Acres Technology. This is a company that's using cutting edge tech, including AI and artificial intelligence, to bring the casino experience into modern times. And they're doing that by making it a personalized, a more interactive experience for casino gamers. John Akers is the founder of this company. John's been at this for 5 decades. And Pete, I know you're on the board of this one, actually.
I am. I like what we see, and I think John Akers does an amazing job. He's been in the industry for a very long time, and they're starting to expand a little bit outside of the United States as well, which I think is a very good move.
Yep, there's no doubt about that. If you want to learn more, there's a link below. You can check that out and have the opportunity to participate in the current equity crowdfunding offering being issued by Acres Technology. This is a sponsored post, by the way. Make sure that you read the disclaimers at the top of the show and consider all of the risks before investing. Check out Acres Technology.
All right, we're going to jump to some sports. As long as we're talking, when you start talking about gambling, the first thing I think of is, well, there's a lot of sports books out there as well. And Las Vegas is going to be pretty much, I think, pretty damn busy when it comes to this weekend with Super Bowl. So outside of the Super Bowl for just 1 second, how about this? College football has general managers. I don't know if you even knew that, but their general managers are becoming a bigger and bigger piece to this puzzle. Why is that? Well, because college football is no longer what it once was. We've got the portal, which is free agency. We've got NIL, which is payment, which is, the SEC did a lot of that long before it was part of the deal. But they didn't call it NIL back then. They called it illegal. But nonetheless, there's a lot of money flowing going on there. And I just wanted to point out one of them to you, Mark, because I think it's kind of fun. He's a really good friend. But a lot of people probably know who Ron Rivera is. Ron Rivera lived with our brother Paul at Cal. They both were outside linebackers together. He's an unbelievable athlete. He had a great career with the Chicago Bears, won a Super Bowl there. Phenomenal guy, got into the coaching world. He started at Chicago. He moved around. He was the head coach at Carolina, the head coach at Washington, and had some interviews this year. But he didn't necessarily not get the jobs. There were certain jobs he didn't want. He did get a job he wanted, and this just happened literally yesterday, Mark. So I thought it was kind of fun. He has done so much in his career, and now he's right back at where his career started, Cal Berkeley. So
Wow.
He's a golden bear out there at Cal. He's the general manager. I think what they're doing is very similar to what a lot of schools are doing is you might have other people doing the other sports, but you've got a very high focus on football. And I think that's what Cal's decided to do. He will be one of the better folks out there, I think, as a general manager. It's going to be exciting. I think it's going to be a lot of fun. What do you think about the fact that college football is no longer amateurs? These guys are true professionals. They're getting more money right now than a lot of guys that are going to get drafted this year, got drafted last year. Brock Purdy still playing under a contract, Mark, under $1 million a year. Guys like Shedeur Sanders is making $4 million a year. So I would say pro sports or pro football is really what we've turned it into in college football, wouldn't you?
Yeah, I mean, there's absolutely no doubt. And like anything else, you just follow the money. So, right. So it starts with the athletes, come to the coaches, the general managers. You're going to get into the merch side and everything. This is only the beginning. It's only the beginning of what I think is a renaissance from a business perspective in college football.
I wonder if it's good or bad. That is still the question. We'll see how that all plays out. I mean, it's crazy with this portal where guys can jump from school to school to school. And I just, I've got some apprehension about some of that. And I think they should still have some sort of a cap on the NIL, but they don't want to. All right, secondly, let's go right to the Super Bowl because that's this Sunday. Everybody's looking forward to it. Football and the NFL is the biggest king there is out there in terms of ratings. So this one's going to be 100 some odd million people around the world that everybody's going to be watching, Mark. But here's my question for you. So you've got Kansas City playing against Philadelphia, right? So the obvious answer is this. Well, you're going to go towards Kansas City as the team you're probably looking for to win this football game. Here's what I'll throw you out, what's on paper that stands out for me. So Philadelphia is the number 2 rushing team in all of football, the number 3 rushing with touchdowns in all of football. They're number 4 in terms of interceptions. They've only got 6 this year. Their defense, on the other hand, they're number 1 in yards. They're number 1 in passing. They're number 10 in rushing defense and number 2 in defense with points on the board against them. And yet, Kansas City is still favored. So I put this out to you. Is everybody looking past what a great year Philadelphia had with Jalen Hurts and with the running back and the defensive line, the offensive line, and all of that? All those numbers kind of stack up. By the way, Kansas City is in very few of the top 10 of anything this year. So I throw this out to you. Who do you got for the Super Bowl?
I mean, listen, the math isn't mathing, right, on paper. So, and I'm going to say something that as a New Yorker / New Jerseyan is probably going to get me some hate mail. I think, looking for Philly to take this one on Sunday. And I guess my question back to you, Pete, is how do you reconcile that what looks like a clear favorite on paper based on their record during the season does not have them as the favorite in terms of the odds makers? How does that stack up?
I think it's just the fact that all they do is win. And I'm not trying to be funny or anything, but they win, and they win in different ways. In the first couple of years, the first 2, and they're going for a three-peat, by the way, but the first 2 years, it was all about Patrick Mahomes. That was the storyline. Patrick Mahomes, unbelievable. You can't deny his talent level and the fact of how many Super Bowls that Kansas City's been to, and it's just incredible, right? But all that being said, you got to take a look at all the other various numbers that are out there. Their defense is much better this year. That's really one of the strengths that they've had. But he's this magical guy who has an unbelievable way of being able to put the team on his back and get there when it really counts. And I think, believe it or not, we call those gamers. He is a gamer. He shows up at game time, and he's got great receivers. He's got people around him. But when you look at Philadelphia, Mark, I just look at the offensive line. Everybody pretty much can basically say best offensive line in football. Defensive line, best defensive line in all of football. When you start looking at that, it just starts making you wonder, as long as it's not a fixed game, can they actually win the game being Kansas City? When you got Patrick Mahomes, the odds always move in your favor.
There's no doubt. Well, Pete, that does it for another episode of the Rebel's Edge. This being Thursday, we will not be on tomorrow, Friday. So we will not have another episode covering the Super Bowl. So we will see you back all on Monday at 1 p.m. Eastern Time for the first for the first Rebel's Edge episode of next week. In the meantime, we would love if you went over to the website and checked out tickets to RebelCon 2025. Those tickets are still available. And until then, have a wonderful weekend. Enjoy the Super Bowl. Pete, it's always a pleasure being on with you.
Always fun, man. Great to see you.